Hello everyone, we are from ER Finance. Today we'll be analyzing an IPO of Indian Railway Finance Corporation, which is wholly owned by Government of India, and it is into the business of financing extensively to Ministry of Railway and few other entities. Key points for our discussions are company profile, IPO details, type of issue, objective of raising the funds, revenue mix, pre and post issue of shareholding, company strength, financials, and summary. Company profile. Indian Railway Finance Corporation was incorporated in 1986, which is wholly owned by the Government of India. As per draft Red Heating Prospects, Indian Railway Finance Corporation is registered with RBI as non-deposit accepting infrastructure finance company. IRFC works as a borrowing arm for Indian Railway, and it is responsible for raising the funds from Ministry of Railway that is required to procure rolling stock assets, improvements, expansions, asset management. President of India along with nominee holds 100% equity share capital. Indian Railway Finance Corporation is primarily engaged in financing acquisition of, leasing of railway infrastructure assets, lending to entities under the Ministry of Railways. IPO detail. Company is trying to raise the capital through this IPO by issuing around 178 crores of equity shares of Rs 10 each, where the total amount aggregates up to 4,633.38 crores. The IRFC IPO market lot size is 575 share. The retail individual investor can apply up to 13 lot. IPO price is around 25 to 26 rupees per share, and the face value of the share is Rs 10 per share. Opening date for IPO is 18 Jan 2021. Closing date will be 20th Jan 2021. Minimum application lot 1 shares 575, amount required 14,950. Maximum application lot 13 shares 7475, amount required is 1,94,350. Type of issues. This IPO consists two parts. First is fresh issue, where the company issues fresh shares to public. Second, offer for sale is used for diluting promoter stakes in the listed company. In this IPO, out of total issues, fresh issue will be approximate 66.67 and rest 33.33 will be in the form of offer for sale. Objective of raising funds. The net proceeds are proposed to be utilized towards funding of the following objects: augmenting our equity capital base to meet our future capital requirement arising out of the growth in our businesses. Ministry of Railway requested IRFCs to raise an amount of 5,54,710 million in fiscal year 2020 for funding budgetary resources of Ministry of Railway, and this issue will help IRFCs to maintain debt to equity ratio, and some part of this issue will be utilized to meet future capital requirements. General corporate purpose. The general corporate purpose for which our company proposes to utilize net proceeds, including meeting and expenses incurred by our company in the ordinary course of businesses and towards other expenditure, and as an approved periodically by board or duly constituted committee, therefore subject to the compliances which necessary provisions of the Companies Act. Revenue mix. In case of Indian Railway Finance Corporation, majority of revenue comes from leasing, lending and borrowing. Indian Railway Finance Corporation try to arrange funds from financial market by using taxable bonds, tax-free bonds, and some of the time it generate funds from LIC at lower rate of interest in order to finance project of railway. Pre and post issue shareholding pattern. Currently President of India holds 100% equity share capital. After issues, promoter holding will reduce to 86%. Company strength. Indian Railway Finance Corporation has highest credit rating from CRISIL AAA. NBFCs are struggling with the high NPA, but in case of Indian Railway Finance Corporation, NPA are zero. Indian Railway Finance Corporation believes that there is immense opportunity for expansion plan for Indian Railway in future, which involves financing, and IRFC is a primarily financing source for Indian Railway. Any losses in train accidents are passed on to Indian Railway, so risk for loss of asset is zero in case of IRFCs. Financials. Revenue and profit after tax. As per below table, we can see that the company's revenue is increasing from 2017 to 2019. Company sales are growing at the average rate of 11%, and in the case of profit after tax, it's also responding as per sales. Summary. IRFC has been rated as AAA by CRISIL, which is highest rating of NBFC. IRFC is enjoying monopoly in market, and after issues, majority of holding is with government. Due to low risk, IRFC enjoys 0% NPA. Revenue and profit after tax is growing at average rate of 11% constantly every year. Indian Railway has been planning to improve and expand rail network, and IRFC works as a main source of financing for Indian Railways. IRFCs will be benefited from privatization of railway because IRFC provides financing at lesser cost, and a privatization will get more customer base to IRFCs. As per our opinion, IPO of Indian Railway Finance Corporation is safe for investment. Indian Railway Finance Corporation enjoys status of low risk and market monopoly. An investor will enjoy a sense of security because majority of shares are in the possession of government. Thumbs up. Thank you.